Hi, Tim Biggam back again this week for a Traders Exclusive, and we are knocking on the door of breaking out to all-time highs here. Till further notice, I stick with my range-bound scenario. Certainly a very impressive rally, to say the least. If we close up today, and we're up slightly today, that'll be number 8 in a row for the S&P 500. Don't think we'll get that 100-point Dow day, which would signal 4 in a row for the Dow, which really is a never happen type of event. So certainly the exuberance and the lack of fear is percolating back into the markets, taking things higher here, but similar to the situation in Syria where, something bad is kind of going on, but you really don't want to do anything, give it more time. I think that's the approach we're really taking, and the Fed has been taking for the past, 5 years here almost, with what happened back in 2008, early 2009. That kick the can down the road, give it a little more time, extend and pretend. So, Syria drawing an exact analogy to, the Fed actions where you really don't take much action, just look for things to kind of heal up. But as we know, many times that's not the case. Ultimately, you have to deal with the problem. So we'll see what happens when the Fed starts to withdraw that liquidity, taper off. Looks like it's coming, at the Fed meeting next week, whether it'll be, 10 billion, which the markets, would probably be okay with. But remember, that does take the liquidity out of the system, and those POMO days will be a lesser effect. So I think that'll be a headwind for the market going forward. And ultimately, of course, they have to take that liquidity back altogether. And given the amount of debt that we have out there, that will not be an easy thing to do. So moving forward, I'm taking a look still at some of the high flyer names, selling out of the money call spreads, looking at a stock like Tesla, looking at a stock now like Netflix. Don't like to jump in front of the train while it's still moving, but once these stocks kind of stop going up, then I like to jump in and sell call spreads. Looking out in October, about 8% out of the money on both these names. With Tesla around 165, looking at selling the October 180, 190 call spread, bringing in a little over $2 there. And on Netflix, somewhere around that 305 range, looking at October 330, 340 call spread. Again, bring in a little over $2 there. The implied volatilities are similar there. So got about a 7-8% cushion to that short strike, so these stocks can rally further from these levels here. And given the fact that both these stocks are up, well over 300-400% this year, and that they've stalled out here, I kind of like to position at those levels. So another name we're looking at, as always, is Apple. That had a big drubbing yesterday, showing a little resilience today. I like that as a value play. Conversely, again, looking at that kind of 450 level as an area of support now. So going in October, selling a 450, 440 put spread, bringing in almost $3 net credit on there. So I'd be a willing buyer of Apple down around that 447 level. Really like the valuation and somewhat the yield there moving forward. So until next time, Tim Biggam, we'll see if we break out to the upside. If we do, we'll wait and see what kind of reaction the market has from there. But as always, keep your position sizes accordingly and your stops in place. Take care.